Good morning and welcome to the BioSyent Inc. presentation of Q2 results for 2013. My name is Rene Gorham and I'm the Chairman and CEO of BioSyent. I wanted to start on page 3 with a disclaimer, the standard disclaimer. This presentation is for informational purposes only and is not an offer to buy or sell securities. No stock exchange has approved or disapproved of this information. It contains forward-looking statements, and you should not rely on these forward-looking statements to make investment decisions. And we also do not commit to updating any of the information that's contained in this presentation. I want to start on slide 4 with a review of our sales results, both by quarter and the 6-month period ended June 30th. So you see on the left-hand side our Q2 results, both 2012 to 2013. So in 2013, our sales, overall total sales, reached just a shade under 1.8 million, and this represented a 47% increase compared to 1.22 million in 2012. For the 6-month period ended June 30th, our sales reached just above 3.3 million, and this was 57% ahead of 2.1 million in the 6 months last year, 2012. The drivers of growth for this increase were FeraMAX 150, which continues to grow in Canada across the country, not the same at all in all areas of the country, but we have continued growth and we're had a strong start to the third quarter as well. We made our first shipment of FeraMAX 150 to a customer outside of Canada. It was a modest-sized shipment, but certainly this contributed to our growth in the quarter. Cathogel has been adopted by some additional regional health authorities and key hospitals, and this has also contributed to our growth in the quarter. FeraMAX powder was launched in June. It didn't have a big impact on the numbers, but certainly some contribution. The June shipments would have been trade loading in anticipation of our sales representatives starting their detailing of doctors and other healthcare professionals. And we have seen reorders from key wholesalers start as early as July, and the traction has gained some momentum in August as those reorders have multiplied now to several for key bellwether wholesale locations. And finally, our legacy business continued to deliver steady margins in line with historical results, and our volume is in line with both our plan and slightly ahead of 2012 results. So overall, all our sales over the last several years have been growing at a steady clip, and we've looked at in slide 6 at the sales for the 6-month period ended June 30th, and you can see in 2010 that figure was a shade under $600,000, and of course, as I've just described, exceeded 3.3 million in 2013. So that contributed overall to a 77% compound annual growth rate over that period of time. Obviously, the engine for that growth has been our pharmaceutical business. On slide 7, you see an illustration of the quarterly growth in sales, both in dollars and compared to the previous quarter. So we now have 15 consecutive quarters of pharmaceutical sales growth, starting with a modest base under $50,000 in Q3 of 2009, growing to this most recent quarter of just under $1.7 million in pharmaceutical sales. So you see that this increase in pharma has really had an impact on our revenue mix by business. So back in 2009, our legacy biofriendly insecticides business contributed more than 3/4 of sales, 78% to 22% for pharma. And you can see that this mix now in the first 6 months of 2013 has gone 90% pharma and 10% legacy. We expect that relative mix, plus or minus a few percentage points, will hold true for the balance of this year. I want to review both net income before and after tax. Slide number 9. You see here, and this requires some explanation, in that in 2012 we did not have any tax expense. At the end of 2012, in Q4, we had used up all of our tax loss carryforwards that accumulated from operating losses in previous years. So we started expensing tax in Q4 of 2012. So in the year ago comparables for Q2 and for the first 6 months of the year, there was no tax in the comparable period. So you can see in Q2 2013, our profit before tax was a shade under $543,000, and that represented a 61% growth versus $337,000 in Q2 2012. And for the 6-month period, our profit before tax was $1,025,000, and that represented 68% growth versus $611,000 in 2012 for 6 months. And on a net basis, you see that now that we're expensing tax, the growth percentages are not as significant, but nevertheless, our net income after tax has grown 24% for the quarter, that is the second quarter of 2013, and 25% for the first 6 months of the year. A quick balance sheet snapshot. As our sales have grown, so too have our receivables. We've also been building some inventory to make sure that we can service the additional customers and volume that we've got. But most importantly is that we've been able to convert the increase in sales into additional cash on the balance sheet. As of June 30th, we had a little over $2.6 million in cash on the balance sheet, and no long or short-term debt. And over that period of time that's illustrated on slide 10, you can see in the 18 months from December 31 of 2011 to June 30th of 2013, we've been able to increase our total equity by a factor of more than 3. We continue to be focused on growing our business in a disciplined fashion. And on slide 11, there's an illustration of that, looking at our growth in operating expenses and how that compares to our growth in sales. So in the second quarter of 2013, OPEX grew 36% as opposed to a growth in sales of 47%. And in the first 6 months, OPEX growth of 50% as opposed to sales growth of 57%. On slide 12 is a summary of our earnings per share. And once again, this is highly impacted when looking on a comparative basis. This is highly impacted by the fact that we were not expensing tax in 2010, 11, or 12 for the comparable period. So you can see this is a 6-month snapshot. In 2010, we had a loss of $0.01 per share. In 2011, a profit of $0.01 per share on a basic basis. In 2012, earnings of 5 cents, and in 2013, earnings of 6 cents after accounting for a 2-cent expense for tax. Milestones in the quarter. Of course, I've already talked about the launch of FeraMax powder in June, and the positive feedback that we've got from healthcare professionals so far. We've been at it only a couple of months. And this product now is available for us in discussion with potential partners outside of Canada as well. We're having some discussions on that and on FeraMax 150. We submitted 2 new products to Health Canada for marketing approval. And on the basis of normal timelines for approval by Health Canada, we're planning now for a 2014 launch for both of those products. And then finally, we were named to the 2013 Profit 500 ranking of Canada's fastest growing companies, with a 5-year growth rate in the 5 years ending 2012 of 355%. So I wanted to thank you for joining us for this presentation. If you want some more information on the company or its products, I suggest you visit bioscience.com for financials and further company information. You can also visit cedar.com which is where all Canadian listed companies file information, stock quotes that are current on tmxmoney.com, and product information at ferromax.com and cathogel.com. Thank you.